Today's mortgage rates are. Why am I going to get a different rate every place I call?
Well, for the most part, if you get down to it, interest rate's going to be the same no matter which company you talk to. We're all going to be about the same. So there's very little factors that should be. So what I tell people, my clients, when they call me, it's like calling up a doctor and saying, "Doc, my stomach hurts. Can you go ahead and write me a prescription?" No, it's not happening. So the doctor, he's going to bring you in, he's going to look over, you probably do some blood work, he's going to ask you some questions. It's the same thing in the mortgage business. So my biggest competitor is like Quicken Loans. They're the largest competitor here in Middle Tennessee. So a client will call me and they'll say, "Oh, well, I see online Quicken is offering 2%. It's like, dude, there's 11 different factors that go into what makes your interest rate. So although one lender will quote you something, if he didn't bring you in, look at your documents, look at your bank statements and your pay stubs, he has no clue. He didn't do
what the rate would be. For
absolutely.
That
so,
but what if it's just general? I want to know what mortgage rates are today.
I'll give you a range. I'll tell you they're between 3.75 to 4.5 depending on your credit score. So there's 11 different factors that make up the interest rates. Your credit score, the loan to value you're requesting, if you're going to have an escrow account, if you're going to pay down with discount points, the term of your lock. So do you want to lock it for 35 days or 30 days or 45 days? Are you paying your own closing costs or the seller's paying those? Are you doing a 15-year, 20-year, 30-year loan? What's your loan amount?
A lot of people think that you guys just make up rates.
No, there's there's 11 different factors that make up the rates. Those are the things I was just listing. You know, your type of home, do you have mortgage insurance? Are you going to live in it? What's your loan amount? There's so many different things that are involved. Client can't just call up and say, "Hey, what are your rates?" and I just spit out some rates. That's silly. It's like a doctor writing a prescription without bringing you in the office.
The rates are made based on the price of mortgage-backed securities, so it really depends on what's happening with those. When bond prices, mortgage-backed securities prices rise, rates are going to fall, and vice versa.
Right.
There's also factoring in the profit margin for the bank. Some banks do a lot more volume, and they try to do a lot more volume on smaller margins, and that may make the rate with that lender less versus someone's going to do a lot fewer loans and have a higher profit margin. Would that be safe to say that's some difference in rate?
So let's face it, all the banks and mortgage companies are borrowing money from the government for the exact same rate. So we're all getting it for the same price. And all the mortgage companies, so the government has set the max that a mortgage company can make off a loan, so it's 4%. So most mortgage companies are maxing out the max they can make on every single transaction they do. So at the end of the day, your rates, if you call me or you call Quicken Loans, you should get about the same rate at the end of the day. There may be small variances from time to time, but for the most part, the rates from
unless they're advertising some type of freakishly low rate, and
unless
didn't
they're
tell
doing
the customer about a discount point. It's kind of hidden in the fine print.
And that happens all the time.
Originating mortgages requires resources. That means a $300,000 loan costs the same to originate as a $50,000 loan because the profit is all the same, right?
Correct. Yes.
Mortgage lenders aren't as efficient as others, so someone that has streamlined their business model may have a slightly different rate because they're just more profitable.
Correct.
Do you ever get a call? Now, you mentioned Quicken. What about some of the lesser known, maybe some of these non-bank lenders that are involved in some of this nationwide subprime stuff? Do you ever get a call from someone and say, "Hey, I got a quote from some smaller type of a lender," and they've really been misled on the rate?
I get that more off of internet lenders more than anything. Internet lenders. You're with an internet lender, what you have with your Quicken or any of the other internet lenders, you got an hourly employee probably making $8 or $10 an hour, and he's just taking orders. He's answering the phone. "Yes, sir. What's your name, date of birth, social?" And then he's going to hand your loan off to somebody else. So he really has no idea much about the loan process. So he's just going to kind of throw out a rate, and they may even give you a pre-approval on a new home purchase. And I had a client come in today before I met here. They were pre-approved by some internet lender, and then they came to me. I'm like, "Guys, you're not approved right now. You still need to do X, Y, and Z." But they gave them a pre-approval letter, and the realtor had them out shopping. So I see it every single day.
So beware of using the online type stuff for getting a home loan.
Just the loan officers that you're dealing with online, they're call center reps. They're not experienced at the end of the day.
As you mentioned, when you're getting a rate quote,